right, good morning, everyone. February 6th in the Tradingology Trading Room. Good to see everyone this fine morning. Good morning, Dave.
Good morning.
How are we doing this fine Thursday?
Absolutely fantastic.
All right.
And things are really looking interesting for a change. I mean, it's been years since we've had this kind of volatility. I am super excited.
Yeah, starting to watch these on the daily like you're talking about, and just the extended bars and
oh yeah. Yeah, I mean, it was pretty obvious this morning that we weren't going to take a big hit. Now, this is where the internals come into play. I don't think we went negative on the advanced decline line, but we came really, really close. I mean, we're down to plus 10 on the advanced declines.
Yeah, I think it definitely hit right on there and bounced off it for sure.
Yep, but it did not go negative, and that's where these the market internals are really, kind of critical. Is that if it doesn't go negative, the chances are that we're not going to be negative on the day, and that's why they're so important. Hopefully, nobody got sucked into taking a short position.
So it's always a good idea, unless you're trading that and you see a good VA setup and you're in at the open, it's always a good idea to just watch that first 15 minutes and let things settle down.
Yep, absolutely. I'm going to share with you guys something that just blew my mind this morning. The Digital Asset Investor, if you guys don't know who he is, he's a YouTuber that has about 57,000 subscribers. The guy is absolutely incredible. He does some fantastic videos. He had one this morning that he pointed to. He did not play it on his channel, though, because of all the cussing that was involved on this video.
Yeah.
You heard of Bitcoin Ben, right?
Yes.
All right. Well, Bitcoin Ben had a couple guys on from I can't remember the name of the company that they were with, but I'll put the link to it in the chat. You guys got to go check it out for yourself. We can't play it here because of oh my gosh, they're swearing every other word. But these guys are players in the crypto space, and they went to this big meeting with regulators to find out what they needed to do to make sure they were compliant. And in the meeting, and these weren't just like casual conversations, these were speakers, these were lead speakers in this government kind of compliance space that they were attending in this seminar. Big people, and really, really big players in this space, both on the private side and on the government side. And two of them said that Ripple will replace Swift.
Interesting.
They will replace it. Yes.
Well, there's already some partnerships there, aren't there, as well, that I think I read about a few weeks ago between Swift and Ripple?
Yeah, but nothing has really been confirmed. I mean, there's a lot of connections there because R3, with their new Corda software, they were doing a test net, I forget what they call it, not a test net. It's kind of like a proof of concept with the Swift network. Now, R3 Corda software uses XRP as the only digital asset settlement option. So there's a lot of speculation going on whether or not Swift is actually going to be using that or not. So there's a lot of rumors going on, but we don't have any direct kind of confirmations of that yet. But I'll put that in the chat. You guys can go listen to it later. Don't listen to it now. Listen to us for now. But I'll put that in the chat so you guys can go check it out. But basically they said, Ripple is gonna, Ripple and RippleNet is gonna replace Swift in the next couple of years. So big stuff there. Really interesting.
Just a matter of time, and it's floating directly at 28 cents right now. We've already punched over once, and it's on definitely a nice trajectory right now.
Yeah, and the nice thing about the chart on XRP is the fact that in the last 2.5 years, every single rally has sold off pretty hard. But if we go back now to about the middle of December, all the rallies have held, and especially since the end of January, all the rallies have been really, really strong. There hasn't been a large pullback. I think a lot of the negative sentiment probably occurred back in December, and we're looking pretty good this year. Actually, XRP is up 44% last time I heard. I think it's a little bit more now since the beginning of the year, more than Bitcoin. So good news there, yeah. And the stock market, wow, we are starting to see some really interesting things happen in the stock market. Have you got a daily chart of the Dow there and the NASDAQ?
Speak of the devil, I just rolled it over.
Nice. There we go. Look, I mean, this is unbelievable. Look at the gaps in the Dow and the S&P 500. 3 gaps, right? Now, we could talk. I mean, hey, look, the president got acquitted on the impeachment stuff, right?
Yep.
Did they know something ahead of time? Is that why we're going higher? People are buying up the stocks based on that.
Good question.
A couple of days before the acquittal. What the heck? Where are these insiders when we need them? How come nobody whispered in my ear? Right. But time
high yesterday on the NASDAQ. Today and right now we got all-time highs on the S&P and the Dow right now currently.
I'm going to tell you guys right now that in probably within the next week or two, we are going to have the shorting opportunity of a lifetime. I'm going to say that it's even probably a better shorting opportunity than the 2008-2009 financial crisis. It's going to be a massive, massive opportunity. 2000 with the dot-com bubble was a great shorting opportunity. 2007, 2008, during that time period of financial crisis, is a great shorting opportunity. This is going to be better than both of them. Both of them. I'll just lay it on the line right now. This is going to be a massive, wonderful shorting opportunity. We may never see again. I'm thinking close to 30,000 on the Dow. We're at 29,333 now.
Yeah, we're definitely going to 30. That's for sure.
Yeah, I think we get close to that 30. We may cross it. We may not cross it. I don't know. But as soon as it gets close, I'd say within 100 points or so, I'm going to start easing into a short position. Nothing major. I'm not going to put everything on the line. I'm just going to put in very small orders here and there, either on option contracts that are out 6 months or a year, or the futures, the micro E-minis, maybe one contract. That's it. I'm not going to risk a lot because I know this opportunity could end up going for 2 to 3 years to the downside. But I think it's a major, major shorting opportunity.
Yeah, just rolling puts, like you say, long-term puts, protection.
Yes.
Get that protection on.
Yep. I think we're entering that phase.
I see, Steven, you got a question there about the up-down volumes for the spreadsheets, where you can find that, and I will throw the link in here where I am right now. It's called the Markets Diary on the Wall Street Journal, or you can look at multiple other places, but so regularly.
That is definitely the easiest one, yeah.
Yeah, the journal's the easiest one for me to read. So we can come in and see yesterday's all the information, all the unchanged, all the advancing, declining issues on the NASDAQ. That's where I get it's called the Markets Diary.
Yeah, and you don't need a subscription. You can just go right to it.
Yeah, I don't pay for nothing. I don't have a Wall Street Journal subscription. So the regular one, the markets, you get that. They do give you some brief stuff, but I just have it bookmarked for the Markets Diary. so I don't have to hit their website every time. That's where I pull that from. It's not immediate on the market close. You have to wait because all the orders have to come in and it takes them a little bit to tabulate everything. So sometimes it's an hour or so after.
Well, they update until 8 p.m. Eastern time.
There you go. Okay.
Yep.
He says he's looked there, but the volumes weren't matching. It might be while they were still pulling in orders. If you saw a few, and if you're looking at the volumes, like we're talking, these are in, millions. We're only putting in the first 3 into that spreadsheet. Same thing with so look at it here. We're at 3 billion advancing issues yesterday because the markets are obviously up. So you might see a couple numbers slightly off, but the small numbers won't affect you, but it depends on how much difference you're actually seeing. It might be while they're still counting is what you're seeing, Stephen.
Yeah, typically the spreadsheets are updated around 6, 7 o'clock at night. So 99% of the volume is in by then, but they do update until 8 p.m.
Yep, there you go. Okay.
Yep. So yeah, you got to use the first. It's basically on the spreadsheet you're putting in the first. You leave off the last 3 digits. That's all.
Exactly.
Yeah.
So if you're up here on the Dow spreadsheet and you're popping these guys in, and you compare. So 2229. That is obviously most so is off by 1. Maybe it tick changed. Then looking at the advancing volume, 3047, slightly below the 29. So they might have still been counting after they updated the spreadsheet here. But if you compare those numbers, that's not going to adjust it. Those couple thousand out of a billion.
Yeah, they're not. It's not going to affect the percentage changes on the spreadsheet. And whenever the spreadsheet is updated, you can always go back and edit it. So I mean, it's.
Yeah.
I mean, right now, for those who are not, if you have the current spreadsheets, they're all unlocked now, so you can update those.
Yeah, if you want to be super precise, you can, like as he says, you can change this to the exact 2.9.
Yeah, so you can wait till after 8 o'clock. But I mean,
you'll see for
99%.
Yeah,
it's not going to affect anything. Absolutely.
All right. But that's a good question. It took me a little bit when I first started to find those guys, and that's why I saved it up here in the diary. So that's your good spot for those.
Yeah, that's a good bookmark. Oh man, this is super exciting, guys. I'm telling you.
Yeah, just compare all these little stair stepping up, and all of a sudden, boom.
Yeah, starting to see that volatility come in. This is actually, if you expand out the Dow and you go back to 2007, let's see how it compares. Because I think we had something very similar. We had a kind of a drop off and then a kind of a race towards the top. And let's see, we take a look at it if memory serves correctly. I don't know if you can go, maybe you have to go to a weekly to get.
Yeah, I'll pull up like a monthly for 10 years here, or 20
Oh, yeah,
years.
you got to go back to a monthly. Okay. Yeah, because I mean, now actually, that is, man, it has been a very, very long time. You're talking about, 12 years now. Wow. I can't believe how fast that's gone by.
Right? And how much I have to adjust this down to see the whole thing.
Yeah, and look at the volatility on the monthly bars going back to 2017, 2018. I mean, that's crazy too.
Yeah, right in here.
Yeah. Look at that 2007. It looks like a blip.
Yeah, hardly anything.
Really nothing there. Yeah, I mean, it looks like nothing. But we cut the Dow in half. More than half.
We'll adjust these guys down and I'll squeeze them back up later.
Yeah. I mean, we hit 14,000, right? Round number.
Yep.
Yeah. So there's and then you can see all the bars leading up to it. They started getting a little more volatile towards the top. And then we had that, and then we started declining. And then, so we went from 14,000 to 69. That's more than 7,500 point decline. That's more than half, more than 50%.
And then it took 1, 2, 3, 4 years to recover.
Yeah. 4 years.
1 year down, 4 years up.
Yeah. So one of the reasons why I think that we're also coming into a major shorting opportunity here is because look at all the volatility in 2017 and 18 there.
Yeah,
That's just huge, right? Compared to the 2007, 2008 crisis. Look at the bars are much larger now than they were back then. We got some big moves there. And so one of the really big things that I'm thinking about here is that the Federal Reserve had injected $22 trillion into the financial markets back in 2007, 8, 9. And we are now at close to 7 trillion at the top of the market.
Yeah, when it's good times.
When the times are supposed
Quote
to be
unquote.
good.
Right.
Yeah.
Happy times when they're injecting and all. This is what it was last time they were injecting.
Exactly. I mean, at some point, yeah, okay, we've been going up. Absolutely. We have been going up. Where do we think, if I was to pick a target, if the market did decline, at the very least back down towards the 22,000 level that we hit back in late 2017, at the very least.
And that's the only thing you could see as a good support level.
Uh-huh. We'd have to go back down to 18,000 for the next one.
Yeah.
So if we break that, we're going to 18.
Yeah, each 2,000, you can make a slight argument, 18, 20, 22 are going to be the biggest levels there. We had a little hold there. Yeah, for sure.
So we went down about 7,000 points in the 2008 crisis. Matching that would bring us down to 22,000. That's another 7,000 points. I think we're going to break through it. There's just so much going on in the underlying economy. Really hasn't done that well. Most of the QE that's been pumped into the market has gone into financial assets. We have not seen a lot of improvement in Main Street economy. It's just not there. And then all of these injections, why are they injecting $6 trillion into the $7 trillion into the repo markets overnight? That's the big question, right?
Right. Yeah, exactly.
Why? Why is that necessary? The Fed shouldn't even be in that market. It's an interbank market. Did we go negative on the advanced decline? Because we're going negative again here. No, we're still slightly positive. Slightly. But it does not look healthy. And that's kind of the clue.
We're below here, though, on the internals. We're below that 50.
On the average, yeah, absolutely, yeah. Because we've got negative volume there, don't we? Or no, that's still slightly positive.
Just barely.
Yeah.
By a couple hundred. It did dip below.
Yeah. So today, we had, so on the up-down volume, we had a pump up the last couple of days, but it's lower yesterday than it was today, than it was the day before. And today we're just hugging that zero line.
And see the original. So this was Monday, Tuesday, Wednesday. Now we're right in the middle. Today's going to be a super choppy day all day would be my assessment right now.
Yes, absolutely. It's going to be a choppy day.
We're right at the middle. This is right at the middle. This is setting up for another potential, maybe tomorrow.
Yeah.
Being Friday might be a down day.
Yeah, I'm thinking 600 points last Friday, down. Maybe something tomorrow's coming.
That's how they like to flip. A couple days up, couple days down. As you watch the rotations, it doesn't stay buried one way forever, as you guys all know.
Yeah, absolutely. Tesla has been a little bit of a sell-off yesterday.
Yeah, I love this. I pulled up Tesla and I told, these are lines that I drew years ago when I used to be trading options on Tesla.
Uh,
That's from an iron condor way back when. I have no idea when.
oh, wow.
So those were still on my chart. I thought that was fantastic. But then looking at what they've done since then is just amazing in this run up. And I think I saw a comparison that someone was doing where the Tesla run up was identical to Bitcoin.
Hmm.
The chart was like matching identically. I was like, that's interesting. Everyone likes to find correlations or they try and, see coincidences. That's the biggest thing I could say. Maybe it's
Well,
a coincidence. I don't know.
I think that's probably accurate. I would also compare it to Tilray, TLRY. If you take a look at that chart, going back maybe a year and a half ago.
Yeah, because they had the big sell off recently, right?
Well, it was over a year ago.
Has it been that long already? Okay.
Yeah, but they hit a high and then just completely fell apart. I think you'd have to go to a weekly to find it because it was way back there. I've been watching Tilray since then. Yep, there we go. They went up almost hit 300 almost. I mean, that's a massive.
Yeah, 300 is the high as I hold over it.
Look at that round number. And so I've been actually kind of watching that to see if I want to pick up some shares at this point because it's good. I mean, they've got. Are those negative numbers on their earnings or are those positive?
These are negatives, negative 17, negative 8, negative 33, negative 27, negative 56.
Yeah.
Negative 5, it looks like.
Yeah. So, I mean, they actually had a huge order recently to send, I don't know how many tons of marijuana to Israel. They got a big order. Yeah, so on the daily, you can see on January 6th, we had a nice move higher with some big volume. And so I started kind of paying attention to it again. I didn't buy it yet. I wanted to wait to see how it reacted, and it's pulling back a little bit. I texted my son. I said, well, maybe around 17 is a good buy because he's interested in the weed stocks, of course.
Right.
And because everything new is what interests kids, the millennials and I don't know, what's the generation now in their 20s? It's not millennials now because millennials are in their 30s now.
I don't know if they have another name. Is there the Z or?
Is it Z? Yeah. Possibly.
Yeah, Gen Z is 2000 to present.
Oh, okay.
Or they call it the new silent generation, apparently. So we had the original silent generation was from 25 to 45 if you were born. Now we got the new silent generation, or Gen Z.
Gen Z, gotcha.
So yeah, those millennials are Gen Y. They're from 80 to 20. So yeah, like you say, they're 20 years old. 20 to 40 now is those guys.
Yeah. Well, we are volatile on the market, man. That the Dow is like up and down, up and down, up and down.
Just broke through to the negative on the declining and the volume.
Oh, the advanced decline went negative?
Yep.
So we broke out to a new high at the open.
And now they're selling.
Now they're selling it. Yeah, I'm not going to bite. I'm not going to take a bite out of that apple just yet. But we're getting close. And I'm licking my lips. I'm drooling. Just waiting.
There's the 10-minute. Yeah, the MT oscillator's been buried at 10 for the last couple of days.
Uh-huh.
Look at that. Now it's starting to come down. It's at 6.
Yep.
On both the NDX and the Dow.
Yeah. So what I'm going to be looking for, just FYI for you guys, I'm looking for the MC oscillator to kind of get into that 675, 6.7 range, and the Dow and the SPX going higher. So there's a divergence there. It's going to be a divergence. Looks like on the S&P 500 and on the Dow, the SR lines are holding support. Dow's a little bit weaker than the SPX, but those SR lines are holding as support. We have the dotted lines, which are the SR1, is above SR2. That indicates a positive day.
And interesting, NDX is inverted, so it's negative.
Yeah, negative today. Turned negative. Yeah. So we'll see. We'll see what happens with that. But
oh, and speaking of the two, interesting way to look at that. So you could say strong, weak, or I should pull over this one quick chart on the 4-hour. For anybody that potentially traded the VA yesterday, I don't think I've seen this big of a move in one day in a long time.
Yeah, pay attention to those big moves. For sure.
We've been down, and nothing but down on the VA trade, and here's almost a 1.5% in a 4-hour time frame.
Yeah, I mean that shows a change in character
boom, big
for that trade. Dan and I are also working on an update of the relationship between the YM and NQ for you guys. We should have something by next Tuesday. My wife is traveling this weekend, and I've got the whole weekend as a bachelor. So I am going to be diving into, oh, what fun, huh? I'm going to be diving into the VA trade, new indicator.
Dave gets free time and he crunches numbers.
Yeah, I know. Most guys would be like, oh yeah, I can go out and
go to the bar.
Yeah, no, not me. I stick my head in my office and work all weekend.
He says, where's my calculator?
Yeah, exactly. My kids, they say, Dad, you work too much. I said, yeah, no, I'm not dead yet. And to me, work is fun. It's like playtime.
Yeah, so speaking of next week, we will be off for the trading room. For anybody that wasn't here on Tuesday, I will be traveling, so I won't be able to host next week, so we'll take a week.
Yeah, that's right. So it's going to be the week after that. That's right. I forgot.
Yeah, I just recalled that as well. So take care of your other halves. Don't forget Valentine's Day is next week.
That's right. Yeah.
There's my PSA for the day.
Yeah.
But we will be back on the 18th. So we'll cover that on the 18th. You guys are fairly quiet this morning. Any questions hanging out there? We got about 15, 20 minutes or so left.
Yeah, let's open it up for questions here. Just a reminder, February 20th at 1 p.m. Eastern time, after we do this trading room, at 1 p.m. Eastern time, we've got the first wealth class meetup, masterclass meetup. So if you guys are enrolled in the masterclass, that's going to be our first meetup. We're going to be talking about some new strategies, not strategies, but a number of new issues. And also we're going to review the method of choosing and the strategy behind choosing dividend stocks for capital appreciation and dividend. So that's going to be an epic meeting. The very first one.
Looking forward to those monthlies.
Yeah, it's going to be fun. Stephen has a question. Could you repeat what you're looking for on the oscillator before you decide to enter a position and what the lines represent? So the lines are an accumulation of the supply demand. So those are based on market internals, but they're an accumulation number. So as volume comes in on the buy side, it goes higher. As volume starts to decline on the buy side, it goes lower. And so it's kind of a a measurement of the amount of buying and selling in the market. When it hits 10, that's like the maximum amount of buying. It's very, very bullish for the market overall. When they start to decline, but you see the market moving higher, that's a divergence. So I'm going to be looking for the oscillator to start moving lower on the longer time frames, not the 10-minute time frame, but I'd probably be looking at the hour, 2-hour, 4-hour time frames. And I would actually put it up just like Dan has it here, but on the Dow or the SPX on a 1-hour, 2-hour, and 4-hour time frame.
Yeah, so you can also build them. Sorry, Dave. You can also build them sideways, right? So you can have your graphs. Mm-hmm. I'll put one together so you guys see that next time too. So you can have shorter, midterm, long-term time frame.
Exactly, and I want to see a divergence. So if prices are going higher and I see the oscillator going lower, then I want to start. That's kind of the trigger for me to figure out on every time frame. So 1-hour, 2-hour, and 4-hour. That's the trigger for me to begin looking at a short position. Hopefully that helps. Do they move in a somewhat similar pattern? Does it matter if they separate? Well, the yellow line is the actual accumulation. The other two green lines are an average of that accumulation. So I'd like to see the actual line, which is the yellow line, which is the accumulation line in real time, start to fall below the averages. So the green lines are the average of that yellow line. I like to see them decline a little bit. I like to see the real-time line drop below it. And when I see that, then we'll. That's kind of a trigger for sure.
I'm switching it for you live right here. So I'll put all three. I got a daily. I'll switch to a daily 4-hour and a 10-minute, so you guys will see them. I switch this one. Jump in the gear. This one was on the NASDAQ before, and now I got on the Dow. So I'm going to show you that's where you switch this. Exchange. Hit the drop down. Save it.
So the NYSE setting is good for the Dow and the SPX.
And then nothing else in here. Remember the MT Signals V3? I have it on a 3 multi-factor, so if I don't have a ×3, it won't paint in. Mm-hmm. ×3 is 12 hours. We're going to see nothing here. Then I don't have a 3-day, so when I move this to the daily, we will not see the bottom. So that's why we don't expect it to see it. But down here, I do have a 30 minutes, so it's working. Just a quick refresher on the MT Signals V2S. So here's where I'm focusing on the MT oscillator now, because I want to see those changes that we're talking about. So now I've switched it up to the 3 time frames for you so you can get a feel for what he's talking about there. So here we are in the daily. We're at a 3 and a 5 on a 10-minute. So you can kind of see we were up high, bounce down there. Here's where it goes from the +10 to the -10 when it makes the big moves on those higher time frames. As I'm trying to draw this in at the same time, get them all in for you. And there's the daily longer. So we didn't quite get to the 10 on the daily chart. So it's good to take them all into account.
Yeah, so and I would actually draw a trend line hitting those tops, looking at the divergence. When the divergence gets really extreme, then and that's, you need to study those charts and you need to study the oscillator over a period of time. But when you see that divergence, that's kind of an important little signal. So, so on the MC oscillator, I would draw a trend line from the top to the current top. Yeah, from there to there. And then I would do the same thing on the price. And when I start to see that kind of divergence, then I pay attention, and I do it on each time frame. Yep. Exactly.
And now if we go back, we see. So if price
Oh,
starts doing this, that'd be divergence. Right now it's pretty flat.
right. That's exactly what I'd be looking for. Yeah, we're just bouncing around today. See, when we're in that middle area on the internals. Um,
All bets are off.
yeah, you don't want to buy the dips. You don't want to sell the rallies. It's just chop.
No trading zone.
Yep, no trading zone there. Just a lot of chop.
Just go shopping for your honey. Valentine's Day's coming.
Yeah. What are you gonna get for Jess?
I got I can't tell you. She'll hear the recording.
She listens to us.
She does not. Not that I know of.
She might though. You never know.
Right? She might. She might be auditing. Well, we got the big one is the trip going down to Mexico, but then I got a couple other things to go with it.
Yeah, that's nice.
She got me a new Echo Amazon because we got a Ring doorbell, so I can see who's at the door without leaving the office.
Oh, very nice.
Another Alexa somewhere, so I got her an Echo for upstairs.
Oh, nice.
Because that's what I need is more microphones listening in my house.
Yeah, I always wondered about that. I mean, I've got a Google Home here.
Yeah, we got one of those too.
A little puck.
We're gonna have a Google talk to Alexa and see what kind of conversation we can get going.
Yeah, I remember one time I was making a video and all of a sudden it started talking to me. What the?
I have noticed in using my Echo, Alexa is a little bit smarter than Google, at least conversationally. She's easier to talk to. There's Dan's comic relief for the day. I feel I'll be here all week. All right, gentlemen, we're getting close to wrapping. Steven's taking all the questions, so nobody else must have any questions. So Steven's getting his money's worth out of this trading room. So good job, Steven.
No, come on, guys, ask questions here. What are you guys thinking? What's going on? You guys need to engage us. Otherwise, we're not going to do these trading rooms anymore. Get your money's worth. Get in here. I mean, Voltaire, somebody's got to have a question. I know Voltaire always has a question. Andre always has a question. Oh, speaking of the devil, there we go.
Oh, you're not the furthest behind, Steven. You're just the fresh engine. Don't worry about that.
Yeah, no problem, Steven. Ask as many questions as you possibly can.
Andre says the best practice on looking at the internals.
The best is what we mentioned last couple of days is really when you're at the 70, 80 level on those internals, that is a positive day. The market will continue to go higher. Now, remember, it's very, very important that the first half hour of trading, if we stay in that 70 to 80 range like we did yesterday, the market's going to continue to go higher. I mean, there's just no doubt about it. And so you always want to, if you're going to trade, you want to buy the dips and trade it that way. When it's in that 20 to 30 level, which is the opposite side, and we have a negative day like we had last Friday, then you want to sell the rallies. You want to get into those positions where you're, going to take advantage of that down momentum in the internals. I mean, they just basically stays there, and so if it rallies, you want to sell it. Anything in between there, in that 40 to 60 range, or even the 30 to 60, I would say 30 to 70 range, you're looking at chop days. Days are just going to go up and down, up and down. So you got to be really, really swift on your feet. Getting in and out of positions, scalping, those are scalp days. Nothing really, no major moves there. I mean, just like today.
Exactly.
I mean, that YM is down, up. It's just a crazy trading day. Can you cover each of the four on the top? What is the indicator on the Dow?
So the indicator, are you talking about the advancing declining and the up-down volumes?
I think he is, yeah.
Or you,
So,
you're talking about this indicator on this dial? Because this is showing the dial here.
oh, okay.
That's the Market Timer XL original indicator. So let me pull up just to show you it.
Yeah, that's the original one that I created in 1992 for my own trading.
That's just the Market Timer XL with no modifications. I don't believe. No.
No,
There's nothing to change on that one.
no. So that one will measure the issues are the green line and the yellow line. So the advancing issues are green, the declining issues are yellow, and then the volume is the pink line for the declining issues, and the gray line is the volume for the advancing issues. That's all.
So these lines are a graphical representation of these two grids.
Right.
So there's no studies on the first two. This is literally, we're graphing $ADVN minus $DECN, which is advancing declining issues, which is exactly the green and the yellow that he referred to. So right now we're negative 24. That's why you see these lines are hovering right around the zero line. They're in the middle because everything's equal. There's just as many advancing as there is declining issues right now. That's why there's chop. There's just as many people buying and selling right now. So the market's not going anywhere. It's even. It's kind of, as you can think about that. And then the up volume and down volume is the volume going into those issues that are being transacted, which is exactly what he said. The gray and the pink is a representation of these lines. So right now we're positive. So there's more positive volume than there's negative volume right now. But there's more negative issues, which is interesting. That's why it's all choppy. So we have a higher number of stocks, or what we call issues, that are being down, but there's more volume to the upside. So if you just think about that naturally, there's more going one way, but there's it's quantity versus quality is maybe the way to think about that. But that this study is a representation of these put into a line so you can see it.
Right, and it separates out the volume and the issues.
So the first two, I have no studies. It's literally, and you turn off the chart. Like there's no chart here. This is just the setup is basic. And the lines are drawn at 2000 and negative 2000. And then the same thing over here. It's literally just mapping UD volume. I think we have a few videos where we've mapped these out, but if you can't figure this out, throw me an email. Maybe I'll put together a quick video on it for you. But that's how those top four read. And I know we've covered this, like Dave said, a couple times. So reviewed the last few trading room sessions, and we definitely have talked about this one a number of times.
Yeah. So the green dots and the green dots and the gray dots there are the also the volume and the issues combined. So it's the combined, and then the yellow line is the average of those two. So now you're looking at a single number here representing the entire advanced decline up and down volume.
I thought it was interesting. Did you see yesterday how they flipped?
Yeah.
The volume came underneath and it's not something I don't remember noticing that before.
Yeah, and study it real close, because when they get the dots get really close together, that also can indicate a change. Like we got really, really close together towards the end of the day yesterday, and now we just kind of flipped. And they did flip there. So, study it. You get a good feel for it if you study it. You look at it long enough. Now you can see, look how we're separating here. That typically indicates something is changing. It doesn't necessarily mean we're going to go up or down, but it does mean a change. So look at that. The volume is starting to pick up to the upside, it looks like. When you got that gray dot moving higher and you got the green dot kind of following along, but there's a big separation there, and that typically indicates a change. So it looks like we're moving higher here.
So that's the MT internals is the name of that study.
Yeah,
MTXL underscore internals.
Right. Yeah, you need to study those guys. The only reason we actually put up the raw advanced decline and the UV deval is because we use that when we have a true trend day. And if you don't have that report, it's in the normal Tradingology download area. It's it's a report of a phenomena that happens when volatility starts to pick up. So yeah, make sure you read that stuff. But study all of these indicators. The more you study them, the better feel you will have for them.
Yep, that's how I start to look at these. What kind of day is this? Where am I shaping up? I watch the open happen. You say, oh yeah, we're up, we're down, we're in the middle. So I see days like this. It's like, yeah, today might be a day to go clean the living room.
Yeah, exactly. Oh, this is interesting. Nancy Pelosi is holding a news conference after Trump's acquittal. I wonder if she's going to tear up something.
She's bringing her scissors.
She just reminded me of a spoiled little child. I'm going to tear up his speech. He didn't shake my hand, so I'm going to tear up his speech.
Yep.
She was probably sitting there thinking and fuming the entire speech, right? Waiting for that opportunity to show how upset she was. Yep, just a chop day today, guys. Absolutely. All right, guys. Well, I don't know if you need to run, but
yeah, I'd say we're getting close. Andre was just asking if I don't know if there's a specific video. I don't know how much more you need outside of what we've explained though on these lines and these dots.
Yeah, I mean, they're pretty self-explanatory, but if you go over I know we've talked about it over the last 2 weeks in the trading room. So if you missed any of those videos, take a look at those. We have definitely gone over those. The yellow line is the most important. That's the average between the two dots. The gray and the red line are the averages of those of everything. And so, you just kind of follow those. The most important thing about the new one, which is way over to the right, the MTXL, is that when those dots separate, it means that there's a change in the market coming. When they get really close together, look for a continuation of the trend. And
don't overthink it.
Yeah, don't overthink it.
More detail. You don't need more fine details like, oh, the red line took a slight move. If it's up near 80, it's going to be an up day. And it has to stay up there. If it's near 20, it's going to be a down day. And it's there. When you have those extremes is all you're looking for. If you're in the middle, you're not trading it. Guess what? I'm not trading.
Yeah, it's just going to be choppy day. So, yeah, don't overthink it, definitely.
That's all you got to worry about. Up's good. Down's good. Just to the short side. Sell the rallies. Buy the dips.
Yeah, absolutely.
Keep it simple.
Yep. KISS. Keep it simple, silly.
I was stupid.
yeah, I know. I didn't want to say it.
I know. I had to go there.
All right, guys. Well, have a great weekend and have a great week next week. Dan and I are going to come back with some pretty cool stuff on the VA trade. Hopefully, I'm diving into my lab this weekend.
I did have a few people asking about your X Factor and the other scripts. So as soon as any scripts are available, we will let you guys know, and they'll either just be added to the collection. Most likely is what's going to happen there.
Yeah, absolutely. Oh, you're welcome, Stephen.
Awesome. Andre, short term. So this is just for intraday. This changes every day. So if I see something up, I'm not taking a swing position. This is all, I'll take a position for a few minutes, a few hours, maybe just throughout the day and then close it out later. that's how I use this guy. It's not a long-term strategy.
Yeah, the oscillator is a long-term stuff, but the that one I take it. I mean, basically, it's like taking a barometer measurement of the market in the first half hour. Are we above 70? Are we below 30? Or are we in the middle? That's all I want to know, really, for that.
Exactly. Thank
You're
you,
welcome,
Walter.
Voltaire. Absolutely. All right, Dan, have a great trip next week. I'm terribly envious, but send me some pics. Love to see what's going on down there.
We'll come back with more pics of the Caribbean Ocean.
Awesome, man.
I got my Riviera Maya hat on. I'm ready today, but I didn't get the camera on, so you didn't see it.
Yes, very nice.
All right, guys, have a good weekend. Have a good
one, guys. Take care. Bye.